Good afternoon, traders. This is Trader Tim from eMiniMind.com. Today's the 8th of June, Thursday, 2017, and I wanted to talk a little bit about the week and review a couple of the trade setups that we've had. We've gone into this really nice bull flag, and we have just dipped below this big body candle from on the 2nd, and then most of the trade has been within that range. And in Tuesday's session, we were talking about how we like to look at the previous day's range, or in the case of a bigger consolidation, Tuesday's candle was encompassed by last week's big body candle. And so that is typically indicative of a range bound or a consolidation period when we're within a larger body candle, so just keep an eye out for that. Once we break the outside bar, either the high or the low, what I like to do is look at, what is the reaction like? Do we break down and then accelerate? Do we break out and accelerate? Or in the case of yesterday, do we break down and immediately go right back in, and buyers are stepping in and pushing the market back up? And so how can we trade that? Well, if we go to Wednesday, and we back up to kind of that breakdown, so the market is mostly in the larger body candle, in that range for the morning, and late morning we get a little bit of a breakdown, and so the market breaks down below lows down here, and we didn't get a swing break right away. This first little long setup here traded up to the short, so it's easy to go back in hindsight and kind of see what the market has already done, but if we pretend that we're looking at this in real time, well, you don't know that this short is going to fail. So I always like to draw up the next move. In this case, the market broke down, so I drew up the short. We saw that there was a reaction there, moved a couple of ticks away. It traded at the opposing long, and then broke through the 61.8. And it's at that point that you can remove the short drawing, and then just go ahead and grab the anchor, the most recent low to highs, and get into a setup, in this case 24.28. And so that setup was the one that continued on into the close. Now, managing a setup like this, we've talked about a couple of ways in the live trading sessions that you can manage the trade. You can trail each candle's low after we break the high of the anchor point. So I don't like to get too aggressive right away. I like for us to break highs, and then I start trailing each candle's low, and you can do that up until you get taken out up here. You can trail swings, so let the market make a high, let it pull back. Once it makes a new high, you can drag your stop from original entry up underneath the next swing low, makes a new high, it pulls back, it makes a new high, take your stop underneath the previous swing low, put it up under the current swing low, and you just keep doing that all the way up. You want to make sure, if you're doing a little more conservative trail stop or any trail stop method, that as we get to the close of the day, that you don't get caught holding overnight. I never hold my futures contracts overnight, and you don't want to get stuck with a position on at the close. So that's kind of how you can use the daily price action to give you sort of a expectation for where we can go from here. So if the market were to have dipped down and started to accelerate to the downside, then continuing those shorts on the way down is totally valid. But since we dipped down and immediately put in this V reversal and then broke the 61.8 of the short, we can draw up the little 50% retracement long, use that smaller entry in the 512 chart, and then just start trailing and hanging on as long as we can. Because typically, the longer you're in a winning trade, the more profit you're able to pull from it. So we'll see what tomorrow brings. We've got the high above us at the 2440s. And that would take us into open space. These dotted lines up here are the negative 23% targets from the larger 50% retracement dailies that are below us. So we are sitting right on top of those targets. I have a low to high on the daily drawn up, 24, 21, 25s. We didn't quite make it down there, but even a pullback to these previous highs, 2417s. These are all healthy market reactions and corrections, if you will, but I think we still have plenty of more upside to go. So with that, be a little bit cautious on Friday. I don't like to trade much more than the morning session. Things can kind of slow down into the afternoon, and we will be doing another live trading on Tuesday, so you can check that out, emoneymind.com/VIP. I hope you have a great weekend. We'll talk to you soon.